Okay, good afternoon, everyone. Welcome to this event. Unfortunately, these days, especially this week, board members tend to have conflicting schedules. So all I can do, rather than enjoy the full timeline of the conference, is all I can do is make some opening remarks, and I will try and catch up with the papers some evening coming up. But my most important point to make is that this is so important. It's so important. I mean, forecasting has always been important to monetary policy, but the challenges of when we have unusual times, it's an interesting trade-off, because you might say, let's throw everything out the window because we don't have regular data generating processes in abnormal times. But of course, that's not the answer. The answer is, how can we, in a reasonable way, take on the exceptional nature of the pandemic, the abnormality. And of course, with the monetary policy strategy review of the ECB, one of the running themes actually is structural change. That it's unlikely that the data generating process for the last 25 years is stable, and it's unlikely to be stable in the future. So over and above everything affecting the world economy, the euro area itself has undergone pretty strong structural change, in particular the architecture of the euro area. So whether that's the kind of change in the ECB itself, for example, whatever it takes, OMT, whether it's the introduction of the ESM, the new fiscal rules, there's many structural changes which say that the some of the fluctuations we've seen in the past, I hope, are not necessarily part of the relevant data set for the future. So, and of course, we've learned a lot also in the pandemic itself. Now, I should say also, looking forward, again, our baseline with climate change is, in principle, actually, and this is, I think, many people share this view, in principle, if the transition is well planned, orderly, sustained, it's not necessarily going to be a big macro critical event. However, there's many scenarios where the transition to low carbon, zero net emissions is bumpy, either because of rapid changes in technology, rapid changes in preferences, or chaotic policymaking, or some mix of those. So, of course, that fundamental structural change is something we are already seeing. In our meeting last week on monetary policy, the semiconductor shortage in the world has been a relevant issue, which actually, if you bring it back, seems deeply interconnected to drought in Taiwan at the turn of this year. So it's, the weather shock scenario is already with us. I also am in favour, and we are, I can tell you, already implementing different versions of growth at risk, inflation at risk. So the fact that we have work of growth under stress is, I think, very welcome to see that. As I said earlier on, when we do have pretty limited data sets, when rare events by definition are rare, when financial stress or tail events don't happen all too often, especially in the context of the short history of the euro area, it's so important that the best forecasting techniques can be applied. Also, of course, augmenting kind of a traditional national accounts-based time series with what's available in real time now, using nowcasting, using factor models and so on, I think are proving their value day by day. I think, it's important, throughout, is that there's a matching between empirical techniques and modeling techniques. So we've seen progress in making our macroeconomic models more granular, and having the kind of side-by-side improvement in our kind of theoretical models with empirical techniques, which can rely on the availability of more granular data, I think is quite welcome. I mean, I'm conscious that this is the 20th anniversary of the first conference in this series. and there's been some landmark papers over the years in this particular series. And of course, so many of the world's greatest forecasters have made contributions to this work. It's also, I think, important to recognise that these days a lot of very good economists are working for the large data companies. And so the fact that in the panel we have such a range from of course, some of the most foremost historical contributors such as Chris Sims, to also the contribution from Matt Taddy of Amazon. So with that, I think I will not hold you up anymore. And I, as I said to you, I hope you all learn from each other. I'm sure the ECB staff will also make sure, in terms of the work of the ECB itself, everything we learn from this will be incorporated into future policy making. And I think the format here should be very interesting. And with that, again, I'll hand back and just wish you the best of luck for the next 2 days. Okay, thank you.